Cool. I think let's get things started. Just gonna give it a second here. Can all hear me okay? Everyone cool? Okay. Great, guys. So today we are going to be talking about tax-free savings accounts and investing in them and what that means. I'm Carly Barnes. I'm part of Team Easy, and today's chat is really about anything you want it to be. I'm going to start off with just a few basics about tax-free investing. And if you have any questions, you can just pop them in the chat. I've muted you for now, but if at any point you want to ask a question, all you need to do is just raise it on the chat and I'll get to it once we've finished with the initial introduction. So tax-free savings accounts, I'm a huge fan. Why is that? I think there's a lot of people out there who actually have no idea what a tax-free savings account is. And I was one of those. I was one of those people a couple of years ago. So I'm going to start with a very basic understanding of what a tax-free savings account actually is and how it works and what you can invest in it with. So the National Treasury decided a couple of years ago that South Africans are really crummy savers. If you're guilty of that, say aye. Aye. I'm guilty of that too. So what they did was they thought they would give us a break. They would give us an opportunity to save a certain amount of money every year that we wouldn't have to pay tax on. Now you might be asking yourself, well, do I pay tax normally on money that I'm saving? Well, it all depends. If you're going to be investing your money as you normally would in shares or exchange traded funds, don't be intimidated if you don't know what those are. I'll explain a little bit later what that means. But traditionally, if you're going to invest in things and your money grows or you earn a return on those investments, SARS wants to know about it and they're going to tax you on that. That's how it's always worked. So I'll give you an example to make things a little bit easier. If you were, for example, to take 100 Rand and invest it in Capitec, and that Capitec share actually grew and gave a return and your money grew to 150 Rand, what would that mean for you as an investor? Well, it would mean when you sold that share or that portion of share of Capitec and you'd made that 50 Rand, you would have to pay some tax on the capital gains. It's called capital gains tax. Essentially, that's the tax you earn on the return you make on your investment. You'd also have to pay dividend withholding tax. So that's if you got paid out dividends for that share. And if your money's in cash, you would have to pay tax on the interest. That's just how tax works when you're investing. So National Treasury decided that they're going to give us a break and they're not going to tax us on our investments for a certain amount of money every year, which is super cool. Thank you, National Treasury. We love tax-free investing. Well, you will after this chat. So I'm going to walk you through exactly what it means to invest in your tax-free savings account. Investing in your tax-free savings account means you get to put money into it. Right? When you open an Easy Equities account, you'll notice that you get a couple of different accounts. You get your Easy Equities ZAR account, you get your Easy Equities TFSA, tax-free savings account, and you get your Easy Equities USD or RA. Now we're focusing on tax-free savings today. So what you would need to do to actually start investing in your tax-free savings account is first to fund your tax-free savings account. And how to do that, you can do that in a couple of ways, but we've actually just developed a really, really easy way to transfer your money from ZAR to TFSA. And you can do that via an inter-account transfer. So all you need to do is fund your Easy Equities account as you normally do, and then transfer the funds from your ZAR account into your tax-free savings account. And the money's in your tax-free savings account. Now, I'm going to stop at this point and just talk a little bit about limits because there are some limitations. Don't go bananas and put R1 million in your tax-free savings account all in one go. That's not quite how it works. So every year you get to put in up to 33,000 Rand to invest with in your tax-free savings account. And over a lifetime, you get 500,000 Rand to invest with. So each year you can put in 33,000 Rand into that tax-free savings account, or alternatively, you can do little bits every month. What's quite cool about a tax-free savings account is that it's super flexible. So you're not restricted to how much money you put in the tax-free savings account. You're not restricted as to when. You don't have to commit to doing, a set amount every single month in a certain way. It's really, really flexible, which means it's kind of cool. It suits you if you're a young investor that's just starting out like me. I don't always have the money to invest. I'm really trying. I'm being much more disciplined than I was. But I now can invest when I have a lump sum. So say I have 2,000 Rand lying around that I'm able to save, which I did this month. I can put that straight into my tax-free savings account. Or if I want to be super nerdy and put a little bit of money away every single month, I can do that too. So now we're at the point. I hope you guys are still following me. Just raise a hand or let me know if I'm going too fast or if it's going over your head. Now we're at the point where you have funded your tax-free savings account. You've made a deposit into your tax-free savings account. And now what do? Let's say you're me and you've put 2,000 Rand into your tax-free savings account and you think, okay, well, now what's going to happen? Now is this going to make loads of money for me? I'm not paying tax on it, so I'm going to get extra returns. How does it work from here? Well, I was sort of guilty of just leaving my money there and expecting that to be the end of it. When I first started my tax-free savings journey, I put a bit of money in there and that was it. I didn't realize that what you actually have to do after you've funded your tax-free savings account is to go on and invest that money. That is how you get the best possible returns with the money that you've invested. A lot of people are of the opinion of that. As we know, just having cash, you don't give it the opportunity to have as much growth as it would as if you had invested it. So what do you invest in? How do you use that money to actually invest? Well, in a tax-free savings account, you are able to invest in things that are called, and don't freak out, it's not a big scary idea, but it is kind of a clunky word. It's called collective investment schemes, okay? And what that really means is National Treasury's given us this awesome opportunity and they want you to invest somewhat responsibly. No one wants you to lose your money or, take massive risks. The point of this tax-free savings account is to make sure that you get to save and get the best bang for your buck for it. So collective investment schemes are things like ETFs. An ETF is an exchange traded fund. And what that is, as I said before, is just a collection. It's a collection of things that you invest in one go, which gives you a lot more diversification. You guys are learning a lot today. Diversification, key to your investment journey. I'm going to break that down just a little bit now for you to kind of really give you a basic understanding on what ETFs actually are. So an ETF is you can invest in an ETF as one thing. So the same way that you would invest in a share. It's one transaction, you invest in it as one thing. But what makes this investing instrument kind of special and exciting is that you're not just investing in one thing. You're investing in a collection of things, a collection of companies that follow a certain theme or strategy. The way I kind of use this, I've got an example that I kind of use sometimes, and I compare it to getting to shoes, right? You could either buy one pair of shoes, or you could buy a collection of shoes, one for running, one for your work outfits, one pair of pumps, one pair of brogues, if you're like me and you like brogues, in one go. And that way you've got a little bit of something for everything. It just gives you that variety and diversification. Now, how does that translate into an actual thing that you invest in? Well, I'm going to give you some examples. An example of an ETF would be something like the Satrix Top 40. So the Satrix Top 40, again, is a collection of companies, the top 40 in South Africa, that you can invest in as one thing, right? That's pretty cool. Now, different ETF providers, Satrix is one of them, have different strategies for their ETFs. So you might get a ETF provider that has, a top 50 or a top 40, and they've given all the different companies within that ETF different weightings. So they've got them in different amounts in a mix that they think really works. And that's sort of the difference between different ETF providers and their strategy. So that's the basics of an ETF. And I want to just actually take a minute to expand a bit more on diversification and what that means and why that's really cool. So you've got your ETF. It's got lots of different companies in it that follow a specific theme. You also have lots of different themes. So you've heard that saying, you don't want to put all your eggs in one basket. You don't want to invest all your money into one thing. Well, you can, but it's kind of risky. If something happens to that company, or the markets go crazy, as they sometimes do, you've got all your eggs in one basket. What you really want to do is spread out that risk, and an ETF gives you a great opportunity to do that. So you're investing essentially in a whole bunch of different companies, which, you know, will all do well or not do well at different times, which kind of evens out your risk. And then you can diversify even further. So you can go, I'm going to invest in a local ETF, like the Satrix Top 40, and I'm going to invest in a global ETF, like the CoreShares S&P 500. Now, the cool thing is you don't have to invest in this ETF that tracks, you know, the top US companies. You can invest in rands. You don't have to use dollars. With an ETF, you can actually invest in different ETFs, global, local, using your rand currency. You can also invest in property-themed ETFs, so ETFs that track the property market or companies in the property market. You can invest in ETFs that hold companies that pay dividends, that are dividend-paying companies. So you really get to maximize on your return. So that's really all there is to know about exchange-traded funds. Well, actually, there's a whole lot more, but those are the basics. That will give you a basic understanding of what an exchange-traded fund is. So we've talked about what a tax-free savings account is, a way for you to invest without paying tax on the profits and the returns that you make on your investment. We've also talked about what an ETF is. It's an exchange-traded fund, which is essentially just a collection of different companies that go according to a certain theme set by the provider that you can invest in as one thing. So that's kind of the real foundation knowledge that you need to start investing in your tax-free savings account. Now I'm going to talk a bit about why tax-free savings accounts are super cool and why Easy Equities has an amazing tax-free savings account on offer. One of the questions I got on Twitter today was, what is the difference between investing in a tax-free savings account with a traditional bank and with Easy Equities? What's the big difference? As you know, or may not know, every year, the year that you get to invest your tax-free savings allowance in is within the tax year. So there's often a lot of hype around the end of the tax season on tax-free savings accounts. You might hear radio ads about them. You might have heard from lots of different people and think, what is this tax-free savings account? What's the difference between a tax-free savings account at a traditional bank and with Easy Equities? So this is probably a good time to talk about just cost and how important that is. So if you're an Easy Equities user, as I suspect you are, you will know that cost makes a big difference in your investment journey. The less costs and fees that you have to pay on your investment, the more opportunity that investment has to grow exponentially and compound your returns. So what Easy Equities does really well is we offer an extremely low cost and affordable platform for you to do that. When I say low cost, there are no minimums. So you don't need to start your investment journey, like most of us can't, with a whopping sum of 10,000 Rand or 5,000 Rand or 1,000 Rand. Actually, we don't even need to go into the thousands. You can start investing in your tax-free savings account or your regular ZAR account with as little as 50 bucks, 20 bucks, 10 bucks. That's up to you. So for me, that was really helpful when I was starting my investment journey. I didn't really know what I was doing. I felt like I didn't know what I was doing at the beginning, and I didn't have a lot of money. And people should start investing young, right? And young people don't often have a lot of money. So I think that that's an amazing, unique aspect of Easy Equities, is that you don't need to start with a massive amount. You can start with any amount that you've got. It makes no difference what the actual cost of an ETF is, because you're able to buy a portion of that ETF. How does that actually play out? Let me give you an example. Say, for example, there's an ETF that's trading at, these are the terms that you'll learn as you continue on your investing journey. It's trading at 20 Rand. And you think, okay, that's a pretty cool ETF and I really want to invest in it. I must have 20 Rand to buy one of these ETFs. The truth is you don't need to do that. You could actually invest in that ETF with 10 Rand and you'd be owning half of that ETF. So that's a very unique quality about Easy Equities that gives you the ability to invest in portions of shares, pieces of shares, as opposed to the whole thing, saving up for one whole ETF. You can invest with whatever amount you've got. So that's pretty cool. The other cool thing is that our brokerage is really low. So our brokerage is 0.25%. It's really, really low, makes investing really affordable. And that happens when you transact. So when you buy or sell an ETF, that's the percentage that you'll be charged. And there's no monthly fees, man. You don't have to pay anything to use Easy Equities or be a part of it. There's no fees associated with that. So that's a big difference between traditional banks who will have certain fees for some things and certain fees for others. Every bank has its own rates, and Easy Equities. There's a lot lower barrier to entry in an Easy Equities TFSA, which is why, disclaimer, you're about to hear a big brag, which is why we've been voted South Africa's #1 tax-free savings account for the past 3 years, and we're hoping for a 4th. So that's a major differentiating factor, and that's why a lot of people choose to invest in their TFSA in the Easy Equities account. Now, you might be asking yourself, well, what happens if I don't want to invest my money? I just want to leave it in a tax-free savings account. Because there is an option to do that with banks as well. You can just take a bunch of money, put it in the bank, and you'll earn interest within your tax-free savings account. And like I said before, that's all tax-free. So it's a bonus either way. So you can do that, and different banks will offer different interest rates on that money. At Easy Equities, you can do that too. So you have both options. You can either leave your money in cash and earn interest on it as is, or you can actually invest it, which, if you have a look at returns over, long periods of time, because investing is a long-term gig. If you haven't learned that already, it's probably a good time to let that sink in. Go and do some reading up on Warren Buffett and his philosophies. Investing is a long-term thing. So you're looking to leave your money in your tax-free savings account for as long as humanly possible. But you really want to give it time. Time is like a magic wand when it comes to investing. It just lets your money get bigger and grow more and more and more and more over a long period of time and ride out the market ups and downs. So that's really what you want to do. I've got a few questions coming in from you guys. I'm just going to wrap up some basic TFSA 101 quickly, and then we'll get to some of your questions. I hope I can answer. I mean, the truth is I'm learning every day. I'm learning about tax-free savings every day. Every day I learn something new and interesting. And I think that's really what it's all about. Maybe that's a good way to close this conversation before we take some questions. It's just to talk about what greater risk is there than the risk of not starting your investment journey. If you leave your cash or your savings under a mattress, they're not really going to grow. If you don't invest your cash or your savings, they're going to grow a little bit, but it's tough to say whether that amount is going to beat inflation. So you kind of have to, I know I was kind of scared to take the leap when I first started investing. I was like, I'm not sure, how do I do this? So I hope I've cleared up a little bit of that stuff for you and, empowered you with some information, but also just personally from one investor to another, I think the best way to start is to just start and learn as you go. And you will learn so much as you go. When you can start with as little as $30, I mean, that's what I pay for a cappuccino. So if you can start with that amount, then it really helps build up that confidence, give you some comfortability with how the platform works and how, all of these different aspects come together. You can really start seeing some returns in your tax-free savings account over the long term. Okay, I've been talking way too much. I'm going to just take a look here at the question we received. Okay, I've got a question here. What are some of my personal favorite ETFs and why? Oh man, it's been quite tough to actually narrow it down to some favorites. I'll tell you what what I have always been a huge fan of. You heard me say earlier, diversification is a big thing for me. And I like that. So I like to have different ETFs in different sectors or with different themes, let's call it. And I like to have a little bit of local and a little bit of global. That's my personal strategy. You'll figure out what's right for you and your investment style and your risk appetite and the time you've got to invest. But for me, that's kind of what I like. So I'll tell you what my favorite local and my favorite global ETFs are, and maybe that will give you some kind of a gauge. My favorite local is the Satrix Top 40. I also hold the Satrix Resi, which has been doing quite well for me. And my favorite global ETFs are the Signia Fourth Industrial Revolution ETF. I really like that one, and the CoreShares S&P 500. But there are actually so many ETFs to choose from, and there's so many that to suit different needs. I think sometimes it can feel a bit overwhelming when you're looking at all these different ETFs and what they mean, and but there is a way to help with that too. So if you're looking at ETFs and you're not 100% sure, like which one should I go for, which is right for me, I think first things is to do some research. That's what I do. I go online, I do some Googling, I have a look at what other people are saying. We have some amazing ETF research that we post on a weekly and monthly basis as Easy Equities in our research portal. So subscribe to that. Intellidex does our ETF research, and they go in deep, man. They go into all the constituents and who would be suited to a certain ETF and why, really the nitty gritty. So, I mean, if you really wanted to delve in deep, you could go and look at some research on that if you wanted to. Alternatively, there's actually another way that you can potentially get to know some ETFs. We're currently running a swipe, match, invest campaign with a couple of our ETFs that are available in your tax-free savings account. And I don't know if you've ever used an online dating app. I know I haven't. But if you have, you'll know how easy and convenient it makes things for you to match up with someone that might be compatible, or at the very least get to know them. So I'll post the link on that campaign page for you to go and check out. But essentially it gives you the opportunity to scroll through different ETF profiles, swipe, select if you want to go on a date with them, and then if you're ready to commit, you can commit straight away and invest in them. So I think that's quite a nice way to kind of suss it out as well. Also, I'd say go and check out social media. If there's a particular ETF that tickles your fancy or gets your attention and you want to find out more about them, go and look them up on Twitter, go and check out their Facebook page and see if there's any other information. Most of them are doing really cool stuff to empower people with the information on what they're about. So that's also a great resource for you to go and check out when you're deciding which ETF is right for you in your investment journey. I'm going to check to see if there are any other questions coming through. I'm just double checking here on Twitter. Let's have a look. Okay, I've got a question on Twitter. Someone's asking me, can I open a tax-free savings account for my kid? Absolutely. Absolutely, you can do that. So you can open an account on Easy Equities for your child, no matter how old they are. They'll have a minor account, and you can actually oversee that account and manage it for them until such a time as they turn 18 and they can take over from you. But it's a really amazing gift that you could be giving your children. I mean, if you invested the full lifetime limit, which is 500,000 Rand, and you just left that amount for years and years and years, depending on the returns of that ETF, you could be looking at millions in terms of a retirement nest egg for your child. Or maybe it's something that you want to save for their education, or maybe you want to empower them to start their first business. These are all great, wonderful goals to have when you're investing, as long as you have a long-term point of view. Is there anyone else who has a question for me? If we don't get to all your questions, because we are going to be ending the session relatively soon, if we don't get to all of your questions, we will have a way for you to submit them and contact us directly. And we've just got a team full of TFSA nerds that are dying to answer your TFSA questions and can help you through whatever stumbling block you've got. And we're very chatty on Twitter. We're very social. So if you'd like, you can follow us at Easy Equities. Find us on Facebook, also Easy Equities. Instagram, you guessed it, Easy Equities, and LinkedIn as well. We'll be saving this video and loading it on our site and sending it out to a couple of you as well. So, well, hopefully more than a couple. So if you liked this, but you wanted to go back and take notes, you're more than welcome to do that. You'll have the opportunity to actually receive the recording and watch it again in case there's anything you missed out on. If you've got any more questions that you think about later and you want to hit me up, you're welcome to do that. My Twitter handle is at ShareGalKali, ShareGal Kali. And again, that Twitter handle for Easy Equities is at Easy Equities. Thank you so much for joining us. And I hope this empowers you and gives you the knowledge to make that first investment in your TFSA. Or if not, if you're already a TFSA legend, then smash your whole yearly 33,000 limit. Let's hold thumbs that they increase that over time. We're really hoping they'll do that. That's my goal right now. So I just want to say again, thank you so much for joining us. Really appreciate the input that you've given and the questions that you've asked. And our conversation doesn't end here. Pick it up with us on social media, or I'll give you a link or an email address to email after this if you have any other questions. Thank you guys. You've been awesome.